Okay, just FYI, we're recording and streaming live on YouTube. And this is the Grand County Budget Advisory Board, Friday, September 3rd. It's 1:01 p.m. I'm going to call the meeting to order. First item up on the agenda is election of chair, vice chair, and secretary. Anyone want to make any nominations?
I move to elect Chris Baird as chair.
Okay, is there a second?
I'll second it.
All in favor? Aye.
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 Anybody
Aye.
opposed? Okay, motion passes unanimously. Now, vice chair. Any nominations for vice chair?
I move to elect Quinn Hall as vice chair.
Okay, is there a second?
Second here from Zach Wachesik.
Okay. All those in favor of Quinn Hall as vice chair, say aye.
Aye.
Any opposed? Okay, motion passes unanimously. And then the bylaws have a secretary as well, although normally those duties get delegated to Tara. She's on vacation right now, but I'm sure she'll be willing to do it when she gets back. The minutes, anyway, that's what I'm talking about. It's really the only secretarial duty. But we do need somebody on the board to be the official secretary, even if we delegate it. So are there any nominations?
Can I nominate Chris Kaufman as the secretary?
Sure.
And then
Is there a second?
I'll second that.
Okay. Any discussion? Any objections, Chris?
Nope, sounds good.
All right. All those in favor say aye.
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 Any opposed? Okay, motion passes to elect Chris Kaufman as secretary. And during our first meeting, we always have the minutes from the last meeting from the prior year. So that's what this November 17th minutes are. I understand some of you probably weren't here, but still should get them passed and put up on the website anyway. Does anybody have a motion?
I'll move to approve the minutes as written.
Okay. Is there a second?
I'll second it.
Okay. Any corrections or discussion? Okay, all in favor, say aye.
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 Any nays or abstentions? Can't really see you all, so I'm just kind of working out voice here. So the minutes have been approved unanimously for November 17th, 2020. Okay, so now moving on to review of major fund revenue projections for 2022. So mostly we're going to, in this meeting, we're just going to cover mostly the general fund revenue, and then the main revenue streams for some of the other funds, TRT, TRCC, transportation tax, and healthcare sales tax. I'm going to share a different screen to show some of my projection methodology. Can you all see this Excel spreadsheet with this graph?
Yeah, I can see it.
Okay. So there's a lot of numbers and percentages on here, and so I'll try to just summarize. We've had quite a significant increase in revenue over historical trends, starting about July, August of 2020. And those trends have continued through to the present. The last actual figures we have for our various sales and use taxes that have been paid out are through June. And so everything on this graph, or everything that's 2021 July through December are projections, and January through June are actuals. This totals right here is a graph that shows 2019's actual, 2020's actuals, and then my current projection for 2021. So you can see there's quite a significant increase across the board. My projections on 2021, I do think that they're still quite conservative. But as you can see, for most of the taxes, the rebound in economic activity we saw for 2020 brought most of the taxes back up to at least being close to on par with 2019's levels. The main exception to that is in transient room tax, where we saw a significant decrease in revenue for transient room tax for 2020. However, that's picked up quite a bit, and as you can see, projecting right here, major increase in transient room tax for 2021. At this point, I haven't really decided how we're going to project growth into 2022. I think, and you'll see that I've just taken 2021's projections and carried them straight across to 2022 with no growth. We may want to amend that as we get more information. I'm going to scroll down to some other graphs that show monthly collections. You can see that for the most part on these graphs, the orange line is 2019, blue line is 2020, that right around June or July, the COVID closure, the rebound after the COVID closure, we started to become on par with 2019 in 2020, about July, June, July for the most part. And you can see that for the TRT specifically, it caught up with 2019 in July and August, and then started to exceed 2019 by quite a bit here in September, October, November, and December. So that was the beginning of the trend that we're in right now. Right about August, at least for TRT, it started to climb up. You can see here that with regard to this gray line, which is 2021, we have June actuals, and then you can see across most of these graphs that my projections drop off pretty significantly. And that's being conservative. I don't actually think that this is going to happen. This big giant decline is very unlikely to happen. But the tough thing is that there's nothing to really gauge against. We can run off of 2019 to a degree, but from from February through June of 2020, it's so low, it's such an outlier that it's not really useful for projecting anything. And so the real test is going to be when we get our July numbers in to see how July numbers compare with 2020 and 2019. One of the sort of reality checks I've been giving myself is I've been calculating the rolling average of, our actual collections in 2021 versus our actual collections in 2019. And that's what all this right here is, these average versus 2019. This is the rolling average from January through June as compared with 2019. So you can see that we're way above. The average is about 56% increase over 2019 across all these different averages. And then you can see how my projections compare with 2019 here and 2020. But like I say, 2020 at this point is almost irrelevant because we were closed. It's going to always be a major outlier and not dependable for projections. However, 2019 is, something that we can rely on to a degree because it was a normal year. And so this column right here shows how much lower my projections are as compared with the rolling average as compared with 2019. And so it's still looking pretty conservative. And I'm just, at this point, projecting 10% growth over 2020's figures starting in July. It's just a conservative estimate at this point, but as we get more information, we may need to revise this. And if the trend for growth continues through, the last month that we'll have available to us before we have to approve the budget, we should at least get 2 more months worth of data, if not 3, before we need to finally adopt the budget for 2022. And if it holds strong all the way across the whole, the 3 quarters of the year, then I think we might want to project some growth for 2022. But I am, it's such a wild year and revenues have gone up so much that I'm a little suspicious that we might, in the course of normalization, getting back to normal growth levels, that it's possible we could flatline a little bit, maybe even see some decreases. I'm not really sure yet. But these are probably still very conservative figures, even though, as you can see in this graph, we're projecting major increases in revenue across all of these taxes. And that's what I would consider to be still fairly conservative. And if we look at these graphs, you can see that the actual collections are considerably higher than both 2019 and 2020 in actuals, and then my projections, they drop back down and track a lot closer. That may not happen, may or may not happen, we'll see, but I'd prefer to, at this point, project on the conservative side of things.
So, Chris, from the hospital standpoint, just kind of cluing stuff in. So our July and August were actually, they remained very stable with the start of the year and pretty consistent, about 10% ahead of budget for our predictions at the hospital. So I'm figuring we see the trickle down effect from tourism, so we might see something higher with the taxes.
So you say it was 10% above budget, but what did you budget for growth?
We budgeted we kind of excluded 20 just because it was kind of goofy, but so over 19 it was about 13%.
And then another 10 on top of that is what you saw?
On top of that, yeah, it's been a really, really steady year at the hospital. So I'm figuring with the county, people coming here, it seems like it might hold true with the county as well.
Yeah, that's what I'm figuring. And like I say, we'll at least have 2 more months of actuals before we really have to set a tentative budget, and then maybe 1 more month after that before we have to approve the final budget. So you can see that on all of my projections between, our last actual and the beginning of projections, that there's a major drop-off. I doubt that will happen. I mean, there's always a big drop-off between June and July, partly because of quarterly filers, most of these taxes. Some smaller companies only file quarterly. And so every March, June, September, and December, we see a little bump just from those quarterly filers, which aren't, it's just an artifact of how they file. It's not actual economic activity. So we always see a little bit of a bump, but that's also coincides with the hot time of year. So we do see a reduction in activity. So, we are going to see a drop-off, but it's not likely to be as big a drop-off as what I'm projecting. But I just wanted to kind of give that caveat.
So, Chris, for right now, are you suggesting that we project 2022 as no growth from 2021 actuals and 10% growth over 2019 projected?
10% over 2020 projected.
Oh, 2020, right. Okay, yeah, that makes sense.
Because, yeah, starting July, we recovered, you know, and in most cases, by July, we exceeded 2019. With TRT, it stayed flat with 2019 until August, and then started to go back up in September. But for the most part, you know, I think that the second half of 2020 is useful. I think that we can rely on it to a degree for projections, and that's what I'm using for the most part, is just 10% above 2020 for the second half of the year. However, if you compare it with the rolling average as compared with 2019, it's very conservative. But you know, it would be good to see how those July numbers come in, because, like, as you can see, by July, 2020 had already gone above 2019 in most taxes. The TRT was a little flat, but the rest of them all caught back up and then started trending again. So,
So Chris, are you projecting all sales taxes the same, or are you treating the ones that are more narrowly focused on tourism differently?
all these projections are relative to themselves.
Okay. Yep.
So when I run these projections, they're all based off of their own revenues in past years, and so I'm not applying the same growth rate across all of them. In the objective sense, they're 10% more relative to themselves, not in total.
Okay, but it's the same 10% for each tax. You're not assuming that some of them might grow by 15% and others.
No, not yet, but I will before we're done. I just don't know. So if I switch over, can you see this new screen that I brought up?
Yes.
Yeah.
Okay, so I used this for the purposes of projecting lost revenue for 2020, which is a part of our ARPA funding, can cover lost revenue. So these are probably kind of small, hopefully you can see them, but this would be like normal growth that I'm used to seeing. So like 4.73% in our general sales and use tax, 5.53% in our quarter percent, et cetera. And so some of these were growing a little more, like these larger ones with, I don't know what happened with the 911 citizen surcharge. There must have been some kind of legislative change, because we all of a sudden started seeing quite a bit more revenue. And we've seen quite a bit of growth in car rental taxes also. But for the most part, you know, we're looking at between like 5 and 9% growth, which is pretty typical. TRT usually grows, you know, about, I don't know, 50 to 75, maybe even 100% more than regular sales tax do, the generally applicable sales tax. But these would be normal growth rates, which I expect at some point we'll get back to. So projecting 10% growth would normally be an over projection. But in this case, I think it's an under projection, at least, you know, compared with the trends as compared with 2019. So these figures would be what we'd expect to see normally. But we're not normal right now. And so I still need more information to really understand if I want to project different growth rates for different taxes. And I think that when we start getting, you know, if we can get July, August, and September's numbers in before we approve the budget, that'll help me out a lot to see exactly how each tax is growing relative to 2020. And I think, like I say, 2020's July through December figures are, you know, going to be somewhat useful. But at this point, for 2022, as you'll see when I switch over to our budgeting software, right now I'm just projecting that whatever we project for the 2021, I just carried straight across to 2022. And like I say, if there's some possibility, that some of these taxes for 2021 might come in lower than 2020. And if that happens, it would give me an indication that I need to be careful. And it's possible because the second half of 2020 was a really strong one of our strongest third and fourth quarter in history for most of these taxes. And so, if we see any of these taxes come in for 2021 below 2022 from here on out, that'd be a warning sign to us. At this point, I just don't know. Like Zach
Chris,
said,
I have a question.
Go ahead.
I mean, my assumption for this year and the growth is that it can't be that many more people coming, that there has to be, a big part of it being prices for rooms being higher, thinking of TRT in specific. And so I guess my concern would be that we will look back and look at 2021 also as sort of an outlier where we had, kind of maxed out and room prices went up and that kind of thing. But I don't know does anyone have a sense of how much of it is actual more visitors and how much of it is increased prices?
Yes, to a degree. So Kevin and I have been working a little bit with Love's Communication. They created a dashboard for us. It appears actually to be a combination of increased visitation, increased number of rooms, and increased average daily rate. So it's not just only increased visitation, but the average daily rate has gone up for hotel rooms. For all these other taxes, though, that's not the case. The tax percentages have stayed the same. And so I would argue that the other taxes, not TRT, but, unless the consumer price index has shot up a huge amount across the board, and it may have to a degree, I would say it reflects considerable increase in economic activity. And not just price increases, because I don't think that, the general sales taxes follow that same trend of price increases that we're seeing in the hotel rooms. But hard to say.
Chris and Kevin, does the Love's data indicate any sort of like where they're from? Are we seeing an increase in tourism that's that is happening because international travel is down? Like, can we expect as the pandemic eases or international travel starts again to see a drop in the numbers of tourists, or is that we think that's going to remain steady?
I don't know. That's a good question. We definitely are heavily reliant on domestic visitors right now. Very, very little international travel yet. I mean, it's coming back, but we're almost entirely seeing domestic visitors at this point. I mean, in the past, I've always kind of assumed that international visitors spend more. I don't know if that's true or not, but we can look into it. Because you'd expect that domestic visitors, would be more likely to bring their own motorhome or supplies, etc., whereas international visitors that fly in kind of need to purchase everything. But it's hard to say. I mean, there's a lot of factors contributing, but I think there's got to be an increase in visitation myself.
Yeah, Quinn, I don't have it in front of me, but I do remember Elaine showing, I mean, there are some hard numbers about how much visitors spend. I believe the international visitors spend more. And I think you're right that we've had a big drop in the international visitors and a corresponding increase in domestic, which I think on balance has, been an increase. And as the COVID situation changes, I think it is kind of hard to predict what's going to happen.
Yeah, I guess if for the future we could see the same shift, but also remain balanced if we have less local visitors and more international as the pandemic eases. I don't know. I was just thinking.
Yeah. So anyway, I'm just kind of giving you the methodology here before we switch over to the actual budget software, just so you know where some of these figures that I plugged into the budget are coming from. We did a mid-year budget amendment, and I had higher projections across the board, which are probably going to end up being more accurate than my current projections. I just decided to play it a little safer for the time being, but you'll see when we switch over to the budget software here in a minute that my mid-year budget projections are higher across the board, and they're probably going to end up being more accurate. But with all these, with revenue, most of these line items are subject to change as we move through the process, and I still need to touch base with quite a few department heads on some of these other revenues that we're going to review here. So let me bring up the budget software. And I'll just start going through our general fund revenues. There's a lot of them, so I'm just going to kind of work through them pretty quickly. So if you have questions, I guess just stop me. So here's the taxes that come directly into the general fund. So we've got our property taxes. Most of these line items in this one are property taxes. Chris Kaufman got me some projections. This includes some new growth. I think you said, Chris, that you were projecting about 75% new growth as compared with, was it last year? Is that right?
Yeah, I'm talking with Debbie Swayze about this. She's the one who is going to input that in for 2022. They've already, done probably, a fair amount of that work already. But she thought it would be lower than 2021. And so she's busy right now with BOE. She's going to look at it a little more closely, and so we can adjust it later. But yeah, I put in 75% of the new growth we got in 2021 as a projection for 2022.
Okay. But yeah, so we've got some new growth projected in. The rest of it, is going to be mostly relative to just what we've got budgeted in prior year information. The two that really require significant projection, which we just went over the methodology, are these two here, the generally applicable sales taxes. As you can see, I originally projected higher numbers, and I'm thinking that these will still, even this higher projection might be conservative. I dropped it down a little bit. This green column is our mid-year budget amendment, and this is 2022, so my current projections are a little lower, but they'll probably creep up if the trend continues and July's numbers come in pretty strong again, then might make a big adjustment to this. We've also got aviation fuel tax in here, which I'm just kind of projecting out, mostly based on 2020's figures. Well, I'm going to touch base, though, with Andy Solzvig. You'll see that there's several line items in the general fund that are airport related. And so these are my projections. They might change, though, once I start working with the airport director. The rest are associated property tax collections, prior year redemption, penalties and interest, et cetera. So all fairly straightforward and not a lot of projecting that goes into those. Any questions on just these taxes that go straight into the general fund?
Yeah, The road that's roughly 780,000. I can't read what the road label is. Did you say that's past property taxes?
Assessing and collecting, so the state gives us the ability to collect property tax to cover costs associated with the assessor's office, the clerk auditor's office, anything, you know, they give us a maximum amount that we can collect, and we collect the maximum. So this is supposed to go into offsetting the costs associated with reassessments and all the work that goes into sending out valuation notices and collecting the tax, all that stuff. So this kind of more or less pays a lot of the assessor, reimburses us for the costs in the assessor's office, treasurer's office, clerk auditor's office, et cetera.
Okay.
Yeah, and the recorder's office.
Yeah. Okay, ready to move on? All right. Then licenses and permits. We're already, for business licenses, we're already at about 80,000 year to date. And so that's pretty good business license collections this year. And so I bumped it up 11,000 from what we normally budget, just because we're seeing such an increase this year already. And generally this, you know, only grows or stays close to the same. Everybody has to pay on their business license every year. It's an annual renewal. Planning and zoning fees, we're also seeing quite a big increase this year. We're already up to 96,000, which is unusual. We budgeted 85, so we're already, you know, more than 11,000 above what we budgeted for 2021. But this is a variable line item. It really kind of depends on the private sector activity and who's applying for what development, et cetera. So it's somewhat variable. But I did bump that one up a little bit because activity we seem to be still pretty active in planning and zoning. I don't particularly see any reason why we would drop off. Building permits, I just kind of kept this one the same. Now, but I will check in with Bill Holst, our building inspector, to see, you know, what his estimates are. This one might change after I work with him a bit, but these are our building inspection fees. And then just marriage licenses, which are also somewhat variable, but it's a small amount. So bumped it up a tad to reflect that we've seen a little bit more than 1,500 a year. Any other questions on this one? Licenses and permits? No, okay. Intergovernmental, there's quite a lot in this one. This first one is the loan repayment in, I think it was, let's see, 2020. That was the year we had high water and a major mosquito problem. And so the county helped the district out with mosquito abatement, and we settled on them repaying the county over 3 payments. And so there'll be 2020, 2021, 2022. So this 2022 payment will be the final payment on that. SITLA, down here we've got mineral lease sharing. So SITLA does provide us with some royalties from any type of oil, gas, mining operation that's happening on SITLA property in the county. In 2020, it was pretty low, same in 2019. That's a pretty variable one. You never really know. It's not a lot of money, though, so don't worry about it too much. Here's our federal payment in lieu. Do you know, Chris, is there any projections for 2022 on that, or should we just try to kind of carry it straight across? I think.
Sorry, yeah. I take a 5-year average of the increase and apply it to that. I'll get you that figure.
Okay.
Yeah, we generally see a little bit of an increase, so we should work that in.
Okay. Well, for now, I'm just going to put in the same figure as we're expecting this year. We'll come back to it. Well, it's going to be pretty close to that, maybe a little more. DWR pays us a payment in lieu mostly for Matheson. They're part of the Matheson wetlands. It's always the same amount. And then search and rescue reimbursements. When people buy the search and rescue card from the state or whatever, we get a cut of that. It kind of varies. It depends on how many people buy that card, purchase that. I guess it's like a type of insurance if you need search and rescue. But we used to try to bill for search and rescue, and maybe we should consider doing that again. But it's a real headache and very difficult to collect on these search and rescue. And so at this point, we don't charge for search and rescue. It's free. We do get, this revenue for it, but that's pretty much the only revenue we get besides donations for search and rescue. The rest of it's subsidized by the transient room tax. Then this grant, this CRRSA grant, is a coronavirus-related airport grant. It's zero right now, but I need to work with Andy to figure out how much we expect to be left over after 2021. We haven't calculated that yet, and so I haven't put anything in, but I need to check back with that. And this particular grant can cover maintenance operations and debt service. There was another similar grant that we got prior to this one, which could also cover capital improvement projects, but this particular one can't cover capital improvement project match. It's only for maintenance operations and debt. The Council on Aging, the ALG, Southeastern Utah Association of Governments, we have an agreement with them for senior socialization services, so that's what this is. Then SAM-FLATS. SAM-FLATS is an enterprise fund, and so a lot of the services that the rest of the county provides to search and rescue, SAM-FLATS will pay some amount of money into the general fund to essentially reimburse the general fund for services that are provided to SAM-FLATS. And so this is the search and rescue component. Then we've got this emergency management grant. I'm not super familiar with this one. And we're kind of in limbo a little bit right now with emergency management, so I need to work with Sheriff's Office and Jennifer Swenson on maybe getting a little better projection on this. But this one's based on a 5-year average. This 29,860 is a 5-year average. Then this SHIP grant is also associated with the Grand Center Senior Socialization. It's a small grant.
Chris, I've got that HILT number if you want it.
Okay, let me go back up to it. Okay.
With taking an average of the growth over the last 5 years, the 2022 amount would be 1,345,692.
All right. Thank you. Okay. And then this, what's called the liquor allotment, it's, there's a tax on beer and we get part of that back. And so this is, again, this is a 4-year average for what we get back from the beer tax. Department of Motor Vehicles, so the state contracts with us for motor vehicle registration, licensing, et cetera, and the assessor's office performs that duty. And this is what we get. It was lower in 2020 and maybe lower again this year because of increased online registrations. So I think we really only get paid when they show up to the counter. And COVID had an effect on that, and it may again. I'm not really sure, but this is a 5-year average. But if COVID has an effect again in 2022, then it could be lower than that. Normally, and so this next line item, the restaurant tax contribution, normally we use some of the TRCC money for airport operations, but because we have these coronavirus and ARPA grants, we've suspended this contribution. Once those grants are over, we'll have to resume picking up the tab for the airport operations, and so that's one of the things that we're going to have to be careful about, is that we've gotten quite a bit of one-time money, especially the airport has, and we don't want to, inflate our budget to the point where once the grants are gone, that we are in a deficit, and so I'll have to keep an eye on that. But I did cancel that contribution for both this year and next year because it's being covered by the grants that we've gotten. And the next one is the restaurant tax contribution for Old Spanish Trail Arena. So with this one, I don't usually budget for this one until after we get through budgeting Fund 22, which is where all the restaurant tax comes in. It's at 0 right now. For this year, 2021, I've budgeted to cover the full expense of the Old Spanish Trail Arena using TRCC. So this figure, $654,880, is the total expected operating costs at Old Spanish Trail Arena. And we'll likely be able to do the same thing for 2022 as well. But until I get through budgeting, for Fund 22, we can't reel that number back over yet. So this is going to change for 2022. Just need to wait until we get through budgeting for Fund 22. The museum, the museum has a department in the general fund as an expense, and we usually transfer TRT money over to cover that expense. So this is a reimbursement for the funding that we provide to the museum, and this comes from our TRT fund, our Fund 26. They haven't put in a request yet, but they usually don't ask for a lot more. They usually ask for a small increase every year. But when I get the actual request from them, I'll change this, but it's going to be pretty close to that, I expect anyway, unless they have some big unusual request. Then the rec district, oftentimes will budget to cover some of the project costs out at the Old Spanish Trail Arena. I carried across at $50,000. It's been dropping because their mineral lease has been dropping, but it's also, pretty close to actuals. But once the rec district gets done with their budget and they relay to me how much they're willing to contribute, then I'll plug that number in. But it kind of depends on the county and how the county appropriates money to the rec district also. And we'll be going through that process here pretty soon. City of Moab, we have an agreement with them. They pay the full cost of our dispatch supervisor, and that's their contribution to dispatch. This figure might go up even more than this. I bumped it up a little bit because I expect that we're going to have to increase the salaries in dispatch. So this is a bit of a placeholder for now, but I did incorporate a little bit of an increase because I'm expecting in 2022 we'll be bumping up some salaries in dispatch, having retention and recruitment problems there. These line items here are TRT contributions to search and rescue and law enforcement, and in similar fashion with fund, having to budget the TRCC taxes first. Once we get done budgeting for Fund 26, which is where the TRT goes that we use for impact mitigation, we'll carry those numbers across over to here. But we can't really fill these in until we get done budgeting the expense side of Fund 26, which is not complicated, but it just hasn't happened yet. And then in similar fashion to the old Spanish Trail Arena, for 2021, I'm budgeting to cover the full expense of Grand Center operations out of the TRCC. And I expect I'll probably be able to do the same in 2022, but again, need to get through the budgeting process in Fund 2022 and then carry that figure over here. So there's still some stuff that's not been plugged in, but just to give you an idea of what to expect once we get through. And then expense reimbursement varies every year, and this big number right here, I think, is mostly associated with an agreement with the city, which I think is expense reimbursement for some trail work that we were doing for them, or actually it was Bike Skills Park, I think. But a big part of the reimbursement that we're expecting will come into here. But I generally try to forecast what expenses we might be reimbursed for when I fill this out. But I would oftentimes don't know what that's going to be until closer to the end of the budgeting session. And it varies a lot. It just depends on what's going on. This Airport CARES Act, this is the prior grant we got for the airport. There's $305,000 left over that we haven't spent of this grant yet, and because this particular grant is eligible to be used for capital project match funding, we're holding on to this money and instead using the newer grant for operations. And so I don't think we're going to probably spend this 305 this year. I haven't verified that, but we're probably going to carry that 305 into 2022, just in case we end up with the airport project that we need to make a match on. One of the benefits, I guess, also of the federal legislation is that a lot of our airport projects at this point in time are being 100% funded by FAA. And so we haven't had to make a match on any of these projects. They're 100% funded by FAA, but that's probably going to go away in the future. And we usually have to make about a 5% match on an airport project. And so that would be reserved for that 5% match. This ARPA funding, I need to split this in half, which I haven't done yet. I didn't realize that it was going to be paid out in 2 tranches. So we already got half of it this year, and then we're going to get half next year. So I could probably just do that right now. In fact, let me just calculate that. 947, 300. Same next year. And then this last line is a new grant that Mallory's been working on for our public defender. Public defender is funded out of the general fund, and so this is where the revenue side of that comes in. So this is a new grant for managing public defender and part-time public defender. So I got that number plugged in for both this year and next year. It's a brand new grant, and so Mallory did a good job working on that. Okay, any questions on this intergovernmental revenue before we move on?
I do have one question, Chris. In regards to like the CARES Act funds and stuff like that, oh gosh, I can't talk now. So are those funds subject to go back to the government if they weren't spent or anything? Or is there an audit process along those lines? I mean, are the funds at risk of going back?
I mean, we have to do reporting on it. And
Okay.
so, I mean, the airport grants are pretty open-ended. The airport grants are easy because all airport expenses are eligible.
Oh, perfect.
With the other grants, the big ARPA grant, not everything is eligible, although lost revenue is eligible. So we actually calculated, let me look real quick. We calculated lost revenue of 2.3 million, almost 2.4 million. So just in lost revenue alone, that exceeds the total ARPA amount.
Oh, perfect, perfect. Okay, yeah.
I don't think we're going to probably have a problem, hopefully, with just using that full amount for a revenue replacement because our lost revenue exceeds the total.
Perfect.
But we'll see, hopefully.
Yeah.
It works out.
Yeah, that's how we are at the hospital too. We're all of our CARES Act stuff is going through this month, so we'll find out.
Yeah. Okay. Any other questions on intergovernmental revenue before we move on? Okay. So we'll move over to charges for services. This first line item, administrative fees. So whenever another fund in the county, well, there's several other funds in the county that are not the general fund, but these administrative fees are fees that the general fund charges these other funds for accounting services, administrative services, et cetera. And so this is where all that money comes in. And I basically, you know, it's a combination of clerk auditor and mostly clerk auditor, accounting services, and then payroll and personnel services. And I calculated each fund's contribution based on the number of employees that that fund has relative to the total. So that's how we've come up with this number. And each fund there'll be a transfer from each fund into this line item. And it's a tactic essentially that helps to a degree offset the need to increase property taxes because some of the other funds have restricted funding that can only, you know, be paid into the types of activities that are allowed for that restricted funding. And so the more we can use that restricted funding to cover some of these general fund expenses in a legitimate fashion, you know, the more pressure we're taking off of our unrestricted revenue. And then all the fees that are associated with the clerk's office, we actually saw quite a few clerk's office fees in 2021, and I kind of carried that number more or less across to 2022. So we're quite a bit above budget already on revenue in the clerk's office. I haven't really taken a look to see why that is, but it's up considerably. Recording fees, I just used a 5-year average more or less, and we're probably going to easily go above the budget on revenue for recording fees this year. We're already up to $93,000, and the budget's $100,000.
Hey, Chris.
Yeah.
We took the marriage licenses from $10 to $25 this year, and we've had a ton of them. So that probably accounts for a significant portion of that.
Yeah, okay, for the clerk's fees, yeah. So anyway, recording fees is just based on a 5-year average, roughly. Airport fees, I'm basing 2022's budget off of 2020 and the fact that we're going to exceed the $25,000 budget for 2021. We're already up to $24,800 for airport fees. And I'll work with Andy to refine these airport revenue fees more as we progress. Once I start working with Andy on his budget, we'll kind of go over his revenue line items also. But I've got, some degree of projection happening myself, although it's probably a little on the conservative side. Airport vending, this one I've projected somewhat off of our 2021 year-to-date receipts, so we're up to $6,184 so far, and so I'm projecting we'll probably hit close to $10,000 this year. Obviously, need to amend the budget for this year also, but I carried that across to 2022. Airport parking fees, same thing. Almost hit the 2021 budget, and so we're probably clearly going to go above that. And I'll refine those projections a bit also, but increased it a little. These plan check fees are fees that I believe these are the fees that building inspection charges, right, Quinn?
Yeah, I believe so.
Yeah. And so I just base this off of some historical averages, and in 2020 should be pretty close to that. Some return check fees, tiny little amount. Special event fees, not as we dramatically increased the special event fees, but I haven't really seen that reflected in revenue so far. So we somewhat calculated based on historical special event activity this 46,000, but we're not anywhere close to being on track with that. So that's something I should check in on. But something's off from our projection there. I did decrease it to 30,000 for 2022, but I'm going to revisit this after I take a closer look at some of these fees, because it's quite a bit lower than what I was expecting. For DNA collections, we do get reimbursed from the state for DNA tests associated with law enforcement. It's pretty variable. It's not a lot of money, so I don't worry about it too much, trying to project it super accurately. Did drop it down a bit, though, because it's not generally $1,400 a year. Transient inmate housing. We don't really have much going on with that right now. Not a lot of moving of inmates around. So that's inconsequential, really. Sheriff's fees. So this would, be what the sheriff would charge for an event if they did a escort or something like that, or were doing, did some security for some reason. And this is variable. It really depends on, if the sheriff is available to do it, and also, what's going on, where those services would be required. So it changes quite a bit. You can see in 2020 we were at like almost 20,000. Then the year before it was 8,800. So it's fairly variable. Just kind of putting a mid-level number there. Search and rescue. This is the old line item that we used to use for when we did bill for search and rescue services. I put miscode on here, Quinn. You might want to check into that. Something got receipted into this account. I don't think that that's accurate. I don't think that's a miscode. So maybe take a note of that and figure out what got receipted in there. But we don't. Nothing should really be going into there because we're not charging. And then there's some various fees in the jail. I think I forgot to plug a number in on this one. Let me just look real quick at we're about 28, so I think this one's probably going to end up being closer to 5,000 this year, and we can carry that straight across. Then the sheriff sometimes also does support for movies, some security, etc. And again, it kind of depends on what's happening, whether the sheriff's available. He's way understaffed right now, and I kind of doubt that there would be, unless he recruits a bunch of deputies, that they're going to have time to be dealing with this kind of stuff. In 2019, we got quite a bit of revenue from the sheriff working with film crews, but the number dropped off quite a bit in 2020, and probably on track if the trend continues to hit maybe 11,000, 12,000 this year. Could go up next year. Again, another variable one depending on what's happening and what the sheriff's capable of providing services for. Then we have a contract with the state for inmates in our jail. That one varies a little bit depending on how many inmates we have. In 2020, we got more than we budgeted for, but we're actually on track right at the moment to hit more closely with this 75,000. I just carry that straight across with kind of a conservative estimate of what we're going to have, but it could be more than that. And then this is another contract for the jail that we have with the state. This second line item here, and I'll work with Shan Hackwell, the jail commander, to see if we need to amend these a little bit. And he can usually predict, fairly accurately what they're going to be. These are just my guesses at the moment. Then with this one down here, there's quite a few we don't use anymore, but this weed removal line, I don't know if Izzy has been charging any private parties for removing or spraying weeds, but this would be if the weed department were to provide services on private property, this is where the revenue for that would come. And I'm a little suspicious that this has been getting coded to the grant side, just because it's been all zeros, and it shouldn't be going to the grant side. So that's another thing, Quinn, to check, is to make sure that if there's any reimbursement coming or invoices for weed removal, that they get coded to the general fund, not the grant fund. And then bailiff services is associated with justice and district court. It's been way down in revenue because of COVID. They're not really even meeting in person. So it's only $1,500 in 2020, and we're on track to hit even less than that. We might not even hit 1,000 for this year, just because the courts are operating remotely right now, And if that continues, then we'll see, low numbers there also. Then for election filing fees, in an election year, and we're going to have an election year next year, we usually hit about $3,700 in fees. That could go up if we raise the salaries of elected officials, because the fees are based on the salaries. So this one may go up a little bit if we change the salaries for elected officials this year, but it's still to be determined. Any questions on charges for services revenue? All right, we'll move on to fines and forfeitures. This is all court-related revenue for the most part. So we've got justice court fines. I projected this $320,000 in revenue for next year based on our receipts so far in 2021, and so really I should probably just go ahead and change my projection for 2021 as well. Every time I get a new judge, their philosophy for assessing fines, changes, and so. But there's also was a dramatic increase due to COVID in 2020, but we're coming back up again. In 2019, we're at 360,000. I don't expect that we'll get back up to that level again necessarily in 2021 or 2022, but it is coming back up from this low point in 2020. And I'll talk with Dana Lee more about that and see what she thinks about it. But this is just my projection strictly based off of what we've collected thus far year to date. And then restitution, it's kind of similar. It depends on the judge, and the 20,000 is a rough 5-year average. Public defender recruitment, not a big number, but this is relative to 2020's numbers, and we're looking like we're going to probably get about 5,000 this year too, so it's probably pretty close. And then security surcharge, again, this can drop. This is payment from the courts to the county for services, security services that we provide. It's dropped considerably, dropped in half in 2020 because of COVID, and it's looking like we'll probably get about the same this year. So I projected the same for next year. Again, it depends on if the courts open back up again to in person. And then fines associated with alcohol. This one's kind of in the middle, I guess, between 2019 and 2020. And then some more fees as per contract with the court, the local court surcharge. I guess I'm not exactly sure what that is. I have to look at the agreement, but I tracked this up a 5-year average. And then the state reimbursement, this is probably for district court for security, and they're totally shut down right now, so I don't know that we'll get anything this year, and maybe nothing next year. It just depends on the COVID situation and whatnot. So some variability in this budget because of COVID, and also, a relatively new judge in the Justice Court. But I'll work with Dan and Lee to see if we can refine these a little bit more. But I think this is going to be pretty close. Any questions on this fines and forfeitures revenue? Okay. Then moving on, miscellaneous revenue department. The first one is interest here. I don't know, I guess we need to talk Chris Kaufman. The year-to-date interest earnings are $28,000, and if I project that, the average that we're getting per month through to the end of the year, It's more close to 56,000. We projected way lower than that, but we're already more than double what we projected in what we've receipted so far. And this is for the interest from our main PTIF account. But I assume we're probably going to part this out. Are we going to try to move some of the money out of this and into
So
other?
that's actually because we combined all those PTIF, all those accounts into the one main PTIF. So that account has been receiving all the interest. We need to apportion that out based on a percentage to the other funds that require it.
Okay, so I'm going to erase this 56 then, because it sounds like we're going to have to do some transfers out of that to other funds, right? Anyway, that one's a work in progress then, because we consolidated, we got rid of a lot of our superfluous savings accounts, which means that we're going to have to calculate interest for each of the funds that used to have a PTIF account but don't anymore, and then take some of this revenue and send it over to those funds. And so we can't calculate that right now, so I'm just going to
Yeah, I talked about that with Chris just the other day, and we're looking at hopefully finishing that up and getting it into the accounts by the end of the year. So like it'll be late December-ish before we apportion that out.
Okay.
Chris, as a placeholder, I was suggesting that we put in 65% of the interest that we budgeted for 2021. And that's just based on the drop in interest rates.
65%?
Yeah.
835. All right. I'll plug in 8992 or 8993.
I hope it'll be higher than that because some of our balances should be a little higher, but that's where we need to wait for the information to come in before we figure it out.
Okay. And then with our capital investment, I think in your email or spreadsheet you said 7,900.
Yeah, that sounds about right. I don't have it in front of me, but
in 2020, the auditors calculated almost 34,000. I don't know. I've never been able to figure out how they calculate that. That's one thing that I never really understood, how they calculate the earnings.
They could have been, they may need to factor in, the market value. I'm really just looking at what interest income we're making because, our strategy for all of those investments is to purchase them, hold them until maturity and collect the interest off of them. But, as market values go up and down, the value of the whole investment goes up and down. So it could have been market values that were going up.
Yeah. All right. I'm not really sure what number to plug in because the 7,900 is just the interest and not the market appreciation. So anyway, I'll come back to that one. But are you thinking that we're looking at less than we got in 2020?
Yeah, what's happening right now is that the interest environment is so poor that to get anything better than what PTIF is offering, you'd have to put your investment out for 5 years, which just isn't a good idea right now. So what's actually happening is that the majority of our Zion's capital investment is being held in a PTIF account. So we're getting PTIF interest rates for it. And as our bonds mature and they roll off, they're not being reinvested at this point until there's things that are worth buying.
Yeah.
because our investors, our investment advisors are saying, there's no point in trying to earn 0.5% going out 5 years when we just don't know what it's going to look like in a year or two. It could very well be that interest rates rise pretty sharply in a year or two to combat inflation, and then we'll be sad we've got those 5-year investments. So it's kind of a wait and see right now.
All right.
But to answer your question, yeah, I think it's going to be less because the interest rate in the PTIF is going down. Hopefully it's bottomed out, but it's less than it was in 2020 and 2021.
Okay. Okay, next up we've got ramp fees at the airport. I've been noticing that this budget software has full year actuals that are different than what's in Cassell. And it's probably, I think it's because this doesn't pick up the audit period. So I think some of this 23,000 got accrued, but it's still showing up on here. But 21,000 I think is a pretty good guesstimate for airport ramp fees. Rents and concessions, this is, our what we get from mosquito abatement, Utah Highway Patrol, CNHA, some others. And varies a little bit, but 50,000 is going to be pretty close to what we're going to get. Then we have our lease for 7th District Court. This is always the same, $160,109 every year. Star Hall rent, again, this is one that depends a lot on COVID. We actually have somebody who's interested in, I think I was talking with Sean, and he said that somebody was interested in renting Star Hall every single weekend for 3 months next year. Of course, that depends on the situation with COVID, but I did bump that up from the figures we've seen in 2020 and 2021. Not quite as high as 2019, but I'm expecting that there's a possibility of more activities occurring at Star Hall. It's not a lot of money though, so not something to worry about too much. Airport leases, I need to talk with Andy and see if he'll put together a spreadsheet of all the leases they have out there. I plugged in kind of a placeholder at $210,000, which I think's an okay estimate, but I want to refine that a little bit when I get to working with Andy on his budget. Civic Center, this is actually the Grand Center fees, and we've seen a big drop-off due to COVID. Went from 9,000 in 2019 to 1,600 in 2020. Doesn't look like we've receded anything this year. They're way understaffed right now and just doing senior meal delivery for the most part. So there's not a lot of, due to COVID, there's not a lot of activity. I did, budget for a little bit of an uptick in activity for 2022. But again, it's hard to say with the unpredictability of COVID. And then next line is stall rent, and that's out at the Old Spanish Trail Arena. I budgeted somewhat conservatively here, but maybe this is too conservative. We're already up to almost 38,000 in 2021. So I think I might have put in the wrong number there. I think I meant to put in 36,500, which is closer to what I think, is a conservative estimate. We're obviously going to go past that in 2021, but historically, that's fairly accurate. But I'll work with Angie because we've increased some fees out there, and so that may play into being able to work up a higher projection. But again, a lot of these revenue streams, I just kind of start off with a guesstimate, and then as I work with the department heads, we refine these projections a little better. And then the rent out at the arena, it's dropped down quite a bit because of COVID, but I put in a figure that's lower than a normal year, but not as low as 2020. We'll probably hit about 40,000 this year, I estimate, and maybe we'll hit that next year too if there's not too many problems with COVID. Then senior citizen special projects. This is another one, Quinn, that we really should be. This one we should be receiving into Fund 27, the designated funds.
All right, I'll make a note.
And this is just some random donations for Grand Center, senior socialization. But yeah, we really should be receiving this into that designated fund in Fund 27. And then we've got miscellaneous revenue, which is our kind of catch-all if we have some revenue that comes in that we weren't expecting. I usually just budget something, 10,000, in this year. This big number, the 72,649, most of that is from when we contributed 525,000 toward the USU infrastructure project. We didn't really sign an agreement for that with the CIB, and so it was a CIB loan that the city got, but we made a contribution to it, and we got a separate PTIF account. Normally the CIB, because they issue a grant also, they have the policy that they use up our money first and their money last. So normally we wouldn't get any reimbursement for something like this, but because we never signed an agreement, they just gave it back to us. So this is basically a reimbursement for money that we gave for the USU infrastructure project, and that was what was left over. So those are kind of things that end up in miscellaneous revenue. But you never really know what they're going to be by definition. And then landing fees. This is based on 2020. But again, I'll work with Andy to see if we can bump that up or not. Looks like we're going to go past 29,000 this year. We're already up to about 22,000. And then this evaporative pond monitoring, this is for the oil and gas evaporation pond at Danish Flats. There is, a per barrel fee that we charge, and it's gotten down to be very little revenue because there's little activity out there. The sale of fixed assets, this big $240,000 number is what we were expecting to get from the sale of our old vehicle fleet because we switched over to enterprise lease. And so at some point we're going to auction off the old vehicles in the sheriff's office and around the county as we replace them with these enterprise leased vehicles. And so that's the revenue line for the sale of fixed assets, which is almost entirely all those older fleet vehicles that we expect to auction off. So I need to work with Cody to figure out how much of that's going to happen this year, how much is going to happen next year. But this is the total projection that they had for me for the general fund's sale of fixed assets associated with vehicle sales. But I still need to work that out with Cody. So that's kind of a pending one right there. And then this other line item, sale of materials and supplies. This is the auction, when we auction off just junk, basically, like old desks and chairs and whatever. It's pretty unpredictable what we'll get from each auction. Sometimes, you just can't give this stuff away and just have to landfill it. But I just put in some nominal figure. It's not going to be much one way or the other. The insurance claim payment is, you know, if our insurance company pays us out on a claim, then this is where that revenue comes in, and this is, you know, widely variable also. But 26,000 is, you know, let me look at the data browser here. Yeah, 26,000 is kind of an average, but again, it just depends on what happens and what claims we have. So that's all the miscellaneous revenue. Any questions on any of that? And then this final one in the general fund, this contribution department. If we have to balance the general fund budget by pulling money out of our fund balance to balance the budget, this is where we would do it. So this line, so if we, for instance, our expenses were budgeted to go in excess of our revenues, we would have to balance our budget by taking money out of our fund balance. And so this is where that would happen. When I first started off the 2021 budget, we were looking at having to balance the budget with $362,000. Our revenues jumped up quite a bit from what was originally projected, and so now we don't. I know we're not going to have to take anything out of fund balance to balance the general fund, and I don't think we'll have to next year either. But if we did, this is the line item that we would use for that. So that's it on general fund revenue. Obviously, still a lot of little details left to work out as we go through the process, and you know, just as a caveat, a lot of this could change as we go. But I do like to set the majority of our revenues at the beginning of the process, because then as we start plugging expenditures in and expenditure requests in, we can keep an eye on our bottom line as we go. And that's very useful to be able to see what the bottom line's looking like as we progress through the process, and gives us an indication earlier sooner than later, whether or not we're going to need to make cuts or what. And so this is why I always start with revenue, so that we have something to base off with the bottom line. And so I'll try to fill in, the empty spots in these revenue accounts as soon as possible, so that we understand what we have to work with. And so, let's see, moving on. We'll go to Fund 21, which is where our transportation tax line is. And so this is pulling straight across from the projections that I started the meeting off with. As you can see, it's a little bit lower than my mid-year projection on the conservative side, but we'll continue to refine this as we go, both of these numbers. This is where the budget's at right now. I'm willing to bet that this is probably conservative also, but as we refine our projections, we'll keep changing this. This transportation sales tax can be used for road projects and active transportation projects. So a fair bit of this money stays in the Fund 21, which is the Roads Department fund, but some of this money on the expense side of Fund 21 gets sent to our Fund 47, which is the Parks, Recreation, and Trails Fund. And this is where Grand County Active Transportation and Trails, where their budget lives. And a sizable portion of their budget comes from this transportation tax. And so it's because it allows for expenditures of active transportation projects. But that's the revenue projection for it as well. I'll work with Bill on projecting this B road allocation. We saw a little bit of a drop in 2020, versus 2019. And so I need to work with Bill to see, you know, what we need to do about projecting that for this year and next year. But it's going to be pretty flat, I would say. I don't think the formula's changed much, and our B road mileage really hasn't changed, and so it's going to be close to this 2.6, 2.7 million. And the next main revenue projection is going to be in Fund 22, which is our TRCC taxes. Move up to that. TRCC is restaurant and car rental taxes. And so you can see my current projections are about, what, 250,000 less than my mid-year budget amendment projections. But again, it's probably likely that my original budget projection are more accurate, but we're playing it safe at the moment. And so these are the projections for the restaurant tax, the car rental taxes. We did pass a resolution or an ordinance authorizing another car rental tax on OHVs and recreational vehicles. And I'm not entirely sure how I'll project that. I think I need to add in another line item. But I have a question out to the State Tax Commission about whether or not street legal UTVs would be categorized as motor vehicles and be taxed on these two car rental taxes, or whether they'll be taxed on the new OHV tax, and I haven't heard back yet. But if street legal UTVs are going to be taxed as motor vehicles, according to these two car rental taxes we have, I don't expect that the new OHV tax is going to generate much, because then it would only be applicable to non-street legal OHV rentals and tow-along camper rentals. So I don't know that new tax is going to generate much. But if UTVs are going to be categorized as OHVs, regardless of whether they're street legal or not, probably what would have gone into these two taxes will end up on a new tax line. But there's just too many unknowns for me right now to be able to figure out what that's going to look like. May not amount to much. But in restaurant tax, you know, the main expenditures, we'll just kind of quickly breeze over that. You know, the restaurant tax covers Star Hall operations, and obviously Star Hall costs us a lot more to maintain and insure than we get in revenue. And then normally with the TRCC, we would send a lot to the airport, but at this point the main contributions are going to be to Old Spanish Trail Arena and the Grand Center and trails. And then there's a few other small ones with fireworks. We also send some to Thompson Fire. Any questions on the TRCC revenues right now? Again, these are just projections that are subject to change. Okay. So then moving on to the TRT, this figure is the amount that I'm projecting that we have projected right now for a transient room tax. That's the 37% cut of the transient room tax, which can go toward the tourism promotion, establishing and promoting recreation, film, and conventions, and also economic diversification. I'm projecting it out right now in this fund, but I'm considering starting over again on economic development because so many things have changed. The economic diversification component is a new thing for us. It's going to be about $1 million. About roughly 1/3 of this entire budget will go to economic diversification. And so I'm actually considering moving this entire budget over to an old fund we haven't used for a while called, it's Fund 16. It's called Economic Development. We haven't really used that for over a decade. And so it would give us a clean start on reestablishing accounts and programming, given the new TRT legislation. But right now, I'm still just plugging our revenue projection in right now because I haven't gone through the process to establish that fund for economic development, but I think I'm going to probably do that for 2022. And we can go over that when we get to that fund in specific. But you can see that it's about, looks to be about 500,000 less than the original projection. But again, original projection in our mid-year amendment is probably more accurate than the one right now. But I guess we'll see again as more actual figures come in. Any questions on this side of the TRT revenue? Again, this is 37% of the total that I'm projecting. All right. And then the other side of it is the impact mitigation side, which is Fund 26. So here's something that we're going to have to do, Quinn, is transfer. So the way that the former clerk auditor, Diana, had done the accounting is that when we increased the transient room tax from 3% to 4.25%, she made a new line item for the 1.25%, but it doesn't really reflect any kind of type of statutory restriction, and so it doesn't make sense to account for the money that way. All of this money can be spent in exactly the same fashion. So I'm going to, I think for 2021, I amended the budget to put everything into just one account. So that's something to note, Quinn. We'll have to transfer the money out of this old account into the new one, and then just stop making that calculation where we're splitting it out. Because there's no reason.
That happens on the PTIF upload, right? That's where that's getting split out and uploaded.
Yeah, so just change your upload spreadsheet to,
okay.
And we also need to change the percentages that you're splitting out. And so we need to do a little bit of work because the law changed, and now we're splitting it out differently than we were before. So now we just need to split it out 37% to Fund 23 and 63% to the Fund 26, just a straight split into two accounts.
Okay.
And we'll probably have to go back and retool, make transfers to account for that legislative change.
Okay, no problem.
So put that on our list of things to do.
Copy that.
But anyway, at this point, we've got this impact mitigation. It's current projections are about $1 million less than my mid-year budget projection, but same with all the others. I'll bet that this mid-year projection is going to end up being more accurate, and we'll find out. So this budget mostly covers offsetting expenses in the general fund. There's a variety of different options, but mostly I just sent it to law enforcement, search and rescue, and the museum, and then a solid waste district contribution. And so for the most part, this is just money that offsets general fund expenditures and then therefore frees up unrestricted funds in the general fund to be used for any legitimate governmental purpose. But when we get to this, we can just, talk later about how we want to split this money out. But for the most part, I try to send these restricted TRT monies over to the general fund as much as possible because, again, it offsets expenditures that would otherwise need to be made using unrestricted property tax and sales tax money. And so this is a tactic that I've used for quite a number of years to reduce the likelihood that we'll need to do a property tax increase. But right now, looking at 5.2, 5.3 million, it could be $1 million more than that, or even more. But we're playing it safe right now. Any questions on the TRT revenues? All right, let's see, what do we got then? One more to go. We've got the healthcare sales tax projections. And these are going to be important for our upcoming meeting, next couple of meetings where we allocate these healthcare sales taxes. Let me get down to that fund. That's Fund 36. Right now, the projection about 3 million. Could be more than that. We'll see. But we, at this point in time, we split this money out between EMS and the Healthcare Special Service District. But we may add another line item in here. I've invited the hospital to present. So the hospital can actually get this money as well. And we've kind of somewhat expected that the healthcare district would make a contribution to what's called the disproportionate share hospital match, and that's if some government entity provides about $330,000 as match, the hospital gets up to what, $1 million or something like that?
Yeah.
More.
Yep, that's roughly correct. It's about 1 million. The past couple of years, it's been about 800 to 900,000. It just depends on the split between what comes from the state and what comes from the U.S. government.
Yeah, and so and that's to cover billings that haven't been paid, right?
That's correct. Yeah. It takes care of our uncompensated care. Well, about 20% of our uncompensated care.
So anyway, we used to think that this money couldn't go toward the hospital and it had to go toward a government entity, but that's not the way that the law reads now. And so the hospital is eligible to receive this money just the same as these other two entities are. And so I think that instead of relying on the Special Service District to make the DISH payment, DISH is what we say is short for disproportionate share hospital contribution, that we'll just factor that in probably to our allocations. So we'll probably see another line item show up here, and we'll have to, I think it's about 330,000 that the hospital needs, right?
That's roughly correct, yeah. Yep, yeah, so what I normally do at the hospital is come November, I come up with what our ask is. And then, it's normally in that range. And then we're audited every 3 years. So sometimes there's add-ons down the line, or there's paybacks. And with the situation with the payback, the money, the admin seed money for the DISH goes back to the county.
Okay. So anyway, we've seen sizable growth in this tax, just the same as we've seen with all of our other sales taxes. And so I think, it's a good opportunity to carve out that match payment for the hospital. And so anyway, that's it for our major revenue projections. Any questions before we wrap this meeting up on any of this? All right, so also next week, with regard to any future considerations, I'm actually going to the hospital to get surgery, to get some hardware taken out of my leg, and so I don't think we're going to be able to meet next week. So I think what I'm going to do, normally the next meeting would be covering what I call non-department expenses. So these would be a variety of expenses that are general in nature and not exactly specific to any one department. And I think what I'll do, since I'm going to be out next Friday, is pull all those projections for expenditures of non-department and just send it out to you. And then we'll try and catch up on it in subsequent meetings. But I am going to be out next week, and I just don't really see the possibility of being able to have a budget meeting next week. But I will try to get all of those non-department expense projections put together and send them out for review. And then we'll get caught up in the subsequent weeks. Does that sound all right?
Sounds good. Good luck, Chris.
Thanks. All right. If there's no other comments, then we can close the meeting. Everybody good to end the meeting?
I'm good.
Good.
Okay. I'm going to close the meeting. It's 2:47 p.m. And that's it for this September 3rd Grand County Budget Advisory Board meeting. Thanks.